Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in. Let's take a look, see what people are sharing. If you want to follow me, it's at @finance_finance. And if you want to join our community, finding-value.com. I dive deeper into all these sectors, looking for potential investment opportunities and sharing those opportunities with everyone in the community. They are individual companies across a variety of commodity sectors, and I can chart anything that you guys would like in any sector that you guys are interested in. So gold and silver, he says gold is on sale measured in Bitcoin, and silver is on sale measured in gold. And I would say that platinum is on sale measured in silver, and natural gas and oil are on sale measured in silver. And what that is like a quadruple leveraged bet with natural gas, because natural gas is cheap to oil, oil is cheap to silver, silver is cheap to gold, gold is cheap to Bitcoin, the NASDAQ, and the S&P 500. And I think when all of it unwinds, and let's say we get into trouble even in terms of energy tightness, we could see the whole pendulum swing where oil and natural gas become expensive to silver, silver becomes expensive to gold, and gold becomes expensive to Bitcoin, the NASDAQ, and the S&P 500. And that's what we're hoping for, is you get that entire swing. And then that ratio swing is going to allow you to sell your natural gas or sell whatever is expensive, platinum, and buy more S&P 500, more NASDAQ, or whatever companies you're looking at the NASDAQ. And I don't know if I'll ever go into crypto, but Bitcoin. But that's kind of what the setup is. Elon Musk is writing here. He says the excess government spending is what causes inflation. I'm like, dude, this guy's speaking my language here. He says all government spending is taxation. Correct. The government only has what it takes from others. This is a very important concept to appreciate. It is either direct taxation, like income tax, or indirect via inflation due to increasing the money supply. Now, he understands what inflation is. Here is the problem. If you are going to fix the root cause of what he just described, there's only a few ways that you can do that. Number one, which is basically eliminating the Federal Reserve and how the money is created at interest. That is ultimately the problem, the root cause of the problem. The reason you have inflation is because you need to borrow money into existence, and then you have to maintain the debt that is out there. The problem is that there's more debt in the system than base money supply can pay off. So you have to continually increase the money supply forever. And there's no way to pay off all the debt. Eventually, when the debt implodes, it goes all to the banks. Every single thing that there's a loan against in the system. But the banks didn't put up the correct collateral for it. So ultimately, the design of the money system is causing the problem. And anyone who tries to eliminate the Federal Reserve Bank has not either lived a very long life after that, or there's been many attempts to prevent that person from living after they have eliminated it, like Andrew Jackson. So I don't know what he can do. He's only talking about one aspect of it. The actual root cause is that money is loaned into existence at interest. And if you want, everybody should maybe send a message to Elon stating that it's the design of the currency system that's the problem. It's not government spending necessarily. That's just one Here's the problem. We don't have a currency that's backed by anything either. So the government is allowed to create spending out of from nothing. There is no limitation on government to be limit their spending. But that's in the design of the currency. That's the problem of fiat currencies. And even if you back it with gold and silver, they can still cheat the system by printing more fiat currency ahead of the actual mining of gold and silver. So you have to somehow figure out a way to design a currency that cannot be expanded. Now, people are going to say, oh, it's Bitcoin, it's crypto. It's not, because crypto is an inefficient POS crap of not working as a currency. We need something that's faster, that is way more energy efficient, that is far easier than Bitcoin or these stupid cryptos. We need something that is far better, that can be transferred at lightning speed, eliminates all of the frictional movement of moving money. Like MasterCard and Visa are frictional payments. They take a fee to transact on a network. We need something even better. Bullish trend. This is EIA. So we were up 2 million barrels on crude. We were down for Cushing, down a lot in gasoline, and down in distillates. So we have a pretty big draw across the board there for final products in crude, if you were to add it all up. We were down maybe, I don't know, 3 point, no, 4.2, 4.3, something like that. WTI crude seasonality chart, 20 years, just to show you guys the seasonality of crude. The next few weeks should be interesting. So we've got a big move higher from January, February, kind of basing out. We have the weak spot of October all the way till about the first or second week of December. And I think that's where we're going to bottom out and potentially head higher if you're using seasonality. And hopefully it does do something like that. I would be a buyer down here in December for sure. Narf says, all my uranium followers, I'm getting a lot of DMs with folks borderline capitulating as they can't make sense of the stock share prices with the backdrop of all this amazing nuclear news. I can't profess where the market will be today, tomorrow, next week, or next month. Uranium investing is hard. Markets can remain irrational longer than you can remain solvent. In the short term, the stock market's a voting machine. In the long term, okay, that's just some quotes there. Don't get shaken out. The hardest thing to do is to sit on your hands. If the uranium sector is too volatile, lighten the load. Only invested with an amount you clearly understand as a speculative investment gamble. All that being said, I won't list all the developments in nuclear, as this thread would go on for pages. The thesis is right. It is evident that nuclear is being embraced globally at both a political, government, national level, and financial level. Uranium will be needed. I understand the world has lots of uranium, but it does not have lots of economical uranium that can be mined in the short term. So that is true. There's a couple of things that we can talk about for uranium. The long-term thesis is correct. Oil has a good long-term thesis. I would say that oil is just as strong as uranium. But when you look at uranium, it's a great setup. It's going to go higher, in my opinion. We also have all of the tailwinds behind the uranium sector. That includes an expansionary phase of real estate, credit creation, money coming into the system, where uranium went up in 1970s and in the 2000s during the same market conditions. And that is the most important aspect of it. The supply demand, I think, is less impactful. We've had even more dollar strength, which doesn't help the commodity sector either. Now, here's one thing that I will say against uranium mining companies. The uranium thesis is really strong. The companies themselves are not as strong as other sectors because they are developers or explorers for the majority of the companies in the sector. They are not cash flow machines. Investors, true investors, look for cash flow. Speculators generally look for the money flows moving in and out of a sector. So uranium, from a longer term perspective, there is risk in holding it because they can dilute you if they need to raise money. And a lot of these companies need to raise money, and that's where it becomes frustrating, is that there's a lot of dilution that occurs in the sector in general. I'll just say that. There are other opportunities out there where the commodity is down. The companies right now are making money in different sectors. And I think the setups are just as explosive as uranium. But there's a lot less risk because they're cash flow positive and they can grow production out in the future. That's where I get excited. I'm naturally an oil, natural gas guy. And the market's made me that way. Uranium, I own uranium and I have uranium stocks. My allocation to that sector isn't as big. So I think where a lot of problems come about is that people allocate too much money to uranium. You have to have an appropriate allocation to uranium. And you also have to buy when things are down, not when they're up. And a lot of people chase performance. If you need help on selecting companies and entry points, that's where the website comes in. And I go over the uranium sector. Right now, it's okay, but there's really good entry points in other sectors at this exact moment. But I'm not going to sell my uranium holdings. There's no point to. Everything looks good. Another thing that I think they have a problem with is their time frames are too short. Everybody thinks that you just buy something, it goes straight up. It doesn't work that way. Investing doesn't work that way. It takes time. It takes a time frame that takes years. You buy something cheap and you just sit in it. That's what investing is. It's boring. It's not a gambling machine that things go up 1 billion% in 2 days. I mean, it could happen, but it normally doesn't. It's kind of a grind. People are prepared to run a 100-meter sprint, but really this is a marathon. Rock bottom entries. We're in the end game now, gold to silver ratio, and he's got this, squeezing up. We pulled on back, and it looks like he thinks that we're going to go lower in the gold to silver ratio, where silver outperforms gold. Now, here's the thing, guys. This is what I'll sum up. What I have done historically is I just buy stuff that's cheap. I don't try to trade it in the short term. And that's where everybody is getting hurt. They're trying to time the short term, and then they get disappointed when it doesn't work out. You know what? I'm going to tell you this. I was listening to Howard Marks, and he said, there's only one best entry point, and there's only one best exit point. There's an infinite amount of ways to screw that up in terms of your entry point and your exit point. And everybody thinks that they're going to get the perfect entry point and the perfect exit point. That is almost impossible. So I think expectations need to match what reality is. And I think a lot of people's expectations are off. They just don't know how to invest. They don't know what to expect. They are off. Now, a lot of things take time in these markets. They're not fast. It just takes time. And that's where people get ground up. They get ground up because their expectations of something occurring is on a shorter time frame than what actually occurs. And then the market grinds them up like a meat grinder. So who's wrong there? Well, it's not the market. It's you as an investor. You have to adopt the time frames that the market is allowing you to make money. Period. And there's market swings that occur in the short term. Short term being a yearly basis. You're going to have a high and you're going to have a low. And a lot of the times there could be a big difference between the high and the low, 50+% in some years. You have to buy it when it's cheap. You have to hold on for the entire bull market if you want to play the big move. That's just the way it is. Porter Stansberry says Jay Powell has handed Trump a ticking time bomb by prematurely cutting rates by 50 basis points ahead of the election. Even with inflation still running hot, the Fed has set the stage for an inflationary resurgence. The latest October inflation data released this morning confirms the trend, with PPI coming in at 2.4%, hotter than expected 2.3%. Meanwhile, core PPI rose 3.1, ahead of expected 3%. The bond market is now in full revolt, with 10-year Treasury yields up nearly 70 basis points since the Fed began cutting overnight rates in September. Rising borrowing costs will become a major headwind for Trump's pro-growth and likely pro-inflationary fiscal policies. And it will soon become a major problem for investors paying a near record high 28 times earnings in today's stock market. So as the interest rates go up, it's going to put pressure on this expensive stock market. It's going to put a lot of pressure for it to roll over. So coming on back. SRS Rocker Report, he says, really appreciate the forensic analysis on Tether. It seems as if the world now has a Ponzi nearly double the size of Bernie Madoff. It's going to be quite interesting when the Tether Bitcoin crypto bubble pops. There's your Ponzi scheme, boys. That's what it looks like. Scottie Pippen, Odell, whatever, Beckham, whatever his name is, they're making tweets about it. Yeah, it's a bubble. That's what it looks like. We're in it. From Encore's press release this morning, current contracting prices are higher than when the spot price reached its 12-month high of $115 per pound U308. Even with this low volume in term contracting, utilities are signing into the $100 per pound region. So that's good. Gringo Investments, wow, energy completely hated according to the latest B of A survey. And that's exactly where I want to be, energy, because everyone hates it. They're selling it off. That's where I want to be. That's where your opportunities are at. Banks are the least. I don't want to be in banks. I want to be in energy. And that's where the opportunities will prevent them. Materials, energy, equities, and emerging markets, they're popping higher, it looks like, but I'm going to be where people are hating on. Cross during build season, that's pretty bullish for crude. We've got XLE, energy breaking some downtrends. That looks really good. We've got poor sentiment in energy. We've got just a fresh breakout here recently. That looks really good to me. And this is XLE versus SPY. We're starting to see energy outperform the S&P 500. Looks really good. Really, really, really good. Joe Burnett. I like what he says here because I've known this for a long time. He said, I didn't realize that if the average year the money grows at 10% and the average return in the S&P 500 is 9.7%, then all of the value created there is the money printer. That was startling. And that's former finance professor at Stern School of Business. And I had a chart up a while back of this showing that the S&P 500 has zero gains. It's just going up because of money printing. And it looks like this guy has figured that out. I don't know when, but he's stating he figured that out. Jordan says the best comps to silver breaking above 50 an ounce are copper and oil in the 2000s comparisons. Copper traded between 50 cents to $1.40 a pound for 32 years. It broke out in 2005 and surged 170% in only 12 months. Oil traded between 10 and 40 for 24 years. It broke out in 2004 and gained 68% in 14 months, 95% in 2 years. And we're going to do something just like this again. We've just consolidation. and we're going to run at some point. And we're going to get a big move in a short period of time. And I think it's going to correlate. That's my guess. The Great Marti, he says, the same people who called the tulip speculators deranged gamblers are speculating their net worths on barcodes. You simply cannot make this up. 1.6 billion in gold, 1.6 billion in Bitcoin. There you go. Barcodes, baby. The tulip mania. The dude, so the fake CPI number shows inflation is still going up and the Fed is cutting rates. Why is that bad for silver and gold? Why is that good for BTC? Honest question. It's not bad for silver and gold. It will go up. They want you to go into Bitcoin. They need an intangible asset to soak up liquidity. And also, in the back door, they are using Tether to buy bonds with, treasury bonds. So it's a way to funnel money through the cryptocurrencies to buy treasury bonds, is my guess. Finance Lot says U.S. 10-year yield has broken out. The trend is now clear. Rates are going up in this recession like 1968. This is something we haven't seen in 50 years. Yeah, that's correct. We haven't seen it in 50 years. It's been a long, long time. Breaking news, SMCI, which is Super Microcomputer, has just officially filed that they won't be able to comply with the 10Q deadline, and as a result will be delisted in 3 days. Also, SMCI is NVIDIA's third largest client and now risks bankruptcy. NVIDIA is about to pop just like Cisco did, in his opinion. Yeah, there's a whole bunch of weird crap going down with some of these companies, guys. Some weird stuff going down. At Berkshire's annual meeting, Warren Buffett was asked the following. If you had to start again at 1 million and achieve a 50% annual return, how would you invest? His answer was, Buffett started by saying he'd thoroughly researched small companies with extreme detail, similar to how he used to study the 1,500-page Moody's manual. The problem is that reading the Moody's manual isn't very appealing. So what's the digital equivalent of Buffett's strategy? Start reading company financials, earnings reports, balance sheets, etc. Or perhaps Bloomberg Terminal, SEC filings, S&P Capital IQ, stuff like that. The point Buffett makes is that the money is in the details. Unlike many investors who dollar cost average into ETFs without much thought, nothing wrong with that approach, but it won't get you 50% annual returns. Buffett also emphasizes that this approach only works if you invest in topics you enjoy. Otherwise, the process is too boring to stick with it in the long term. Plus, if you don't enjoy your research, you won't go the extra mile. You won't discover any hidden nuances about companies that'll give you an investment edge. If you really want to beat the market by multiple factors, passion is a requirement. Buffett's strategy is simple. Do the boring yet essential activities that provide great returns, but make sure you're investing in sectors you're passionate about to offset the mundane aspects of investing. As cliche as it sounds, passion is everything. That's it. Will you take Buffett's advice? I actually listen to all of the quarterly conference calls, real time when they come out, of a lot of the companies that I invest in across multiple sectors. I am the most passionate about oil, energy service, fertilizers. I like shipping, tankers, dry bulk. Uranium I cover. There's not much to really listen to on uranium conference calls, I'll be honest. And I listen to precious metals conference calls sometimes. When you listen to the conference calls, there is a huge difference in quality between them. The highest quality by far are the oil and gas quarterly conference calls. Then I would say it goes down after that for the majority of other sectors. And I think that just is because of the amount of money that a lot of the oil and gas space makes versus other sectors that don't make as much. I think that's the case. But I do a lot of this. I look at the presentations of a lot of these companies. I read through them. I fine-tooth comb finding what I think are the best investment opportunities, and then sharing it with everybody. And that's what I've got for today, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website if you guys like, Mayday coupon code, and we'll catch you later. This is Finding Value.